Hi, this is Mark Gordon with GoldenTicker.com on Tuesday, March the 22nd, 2011. And here's the NASDAQ. We came down and got as low as 2603 here, slicing through this green dotted line, which is the 100-day moving average, on some pretty heavy volume here. And then have rallied back. We did have a heavy up volume day 3 sessions ago, which was very bullish. Got us back above the 100-day moving average. And now for the last couple of days, Monday and Tuesday, we've been sort of stalling here in light volume along this gray line, which is the 10-day moving average. So traders are losing a lot of conviction up in this area here, and we could be headed back down unless we get some good volume moves to the upside here. Our next point of overhead resistance will be this red line here, which is the 21-day moving average, and that's at 2722. And today we closed at 2683. So that's our next upside target here. And but right now the NASDAQ is in a nasty downtrend. We did break out of this channel that we rode for many months here, and then we formed this sort of triangle pattern here and broke to the downside. So bearish on the NASDAQ and stocks right now. Looking at the big boys, the Dow Industrials, same story. Coming down in heavy volume, slicing the 100-day line, and the industrials got up back to the 50-day moving average, but the volume has been very light the last couple of days, and we're finding some overhead resistance here at the red line, the 21-day moving average, and the 50-day moving average, which we closed just below. So the big cap stocks having trouble as well. Looking at the small caps, this is the Russell 2000 growth stocks, and a little bit stronger. Came down in some heavy volume and did not slice through the 100-day moving average. Found support down here, and then has rallied back up through the 50-day moving average, a good sign here, and back up above the 21-day moving average here. Stalling today on a pickup in volume, but not too heavy. So the small caps have been the strongest. And gold has been very strong through all this political and social turmoil here. And it's forming what we call a cup with a handle base here, which is a very bullish base here. This handle is called a high handle because the peak of the handle is above the right side of the cup by just a little bit. And so a break above 140.61 would be very bullish. So gold getting ready possibly to break out again and go into new high ground. And commodities have been super strong. This is the GSG. This is a commodity ETF, and it's been riding a nice flowing channel here for many months. And we came down here during the market sell-off here a few last week and all that. Came down here and tested the 50-day moving average, got solid support there, and rallying back up. So commodities very strong in general. And this is the SLV. This is the silver ETF. Silver's been very strong. Had a huge run here in late January, coming off $26, gaining $10, about 40%, just a rough guess there, in just a matter of a month and a half. Super strong. Silver looks like it's getting ready to go back into new highs. The previous high was 35.78, and today we got to 35.60. So silver very strong. And this is a chart of an index called the UUP, which trades the US dollar index. It's an exchange traded fund, and this is a bad chart. From the beginning of the year we peaked out here at 2340 and have come down and undercut this previous low made in November here at 2192 and got down to 2162 yesterday, and the dollar falling very rapidly here. And when we put up a monthly chart of the UUP, we can see that the dollar has fallen very fast since it peaked out here in mid-2010. And if it takes out 2152 here, this previous low here made in 2007, it could be very troubling for the dollar. And we're only about 10 cents away from doing that. And if you're a growth stock investor like we are, Apple has been the stock to watch. It's a extremely large cap stock with lots of growth and big earnings and big sales. And Apple rode a nice uptrend here for many, many months, peaked out here in mid-February, and has been in a downward sloping channel ever since. We came down here last week, tagged the lower end of this channel, and have rallied back up through the 100-day moving average, but volume has been decreasing and light the last couple of days especially. We had a big volume down day here, not good, and rallying back on light volume, finding resistance here at this gray line, which is the 10-day moving average, and lots of overhead resistance coming up at the 50-day moving average, the blue line, and the red line, which is the 21-day moving average. And then we also have a down sloping upper trend line too for it to get above once it gets through there. So lots of headway coming in for Apple, and Apple breaking its uptrend that it held on to through this whole rally is not a good sign for the markets. So all in all, it looks like growth stocks are in a correction. Not a good time to be in those. Not a good time certainly to make any new purchases. And commodities still strong. Gold and silver looking especially strong.